Hi, Eric. I'm just testing and seeing if you can hear me. This is Jim Mahalik.
Hello. Yes, I can hear you.
Okay, great. Thank you, sir.
Awesome, Jim. I'm going to have them make you the host, so you can share your presentation and that. Okay.
Okay, thank you.
Awesome. All right. Thanks. All right. Awesome. I think we're just going to let a few more people join here, and then I'll introduce everybody and we'll get going. Thanks, Donnie. Nice to see you too.
It's a weird hotel.
Hi, Heather. Hi, Lydia.
Hi.
Oh, it's Heather. Hey, Heather. Candy. Oh, everybody wants to say hi, Nikki. Look at that. Everybody's popping in. How fun. Yeah, no pressure for everybody else to come on. That's fine. Figure just another minute or two, and we can get rolling. Jim, how's Dallas treating you this morning?
It's beautiful. I mean, just unusually
Oh, can't hear you, sir.
gorgeous.
Gorgeous?
Yes, yep, just
Awesome.
really nice. Typically it's 90 degrees right
Mm-hmm.
now. But this morning it was about 65, 66 degrees. So
Oh,
yeah, a little Minnesota weather.
in honor of us. I love it. That's
There
awesome.
you go. It makes me
Awesome.
miss the days I lived in Minneapolis.
Well, Minneapolis misses you. That's for sure.
Yeah, except for the winter, buddy. No.
What, 7 months of the year you don't like it? Okay, I get it.
No, well, let me see. It was around December all the way through April. I can't believe it. First year I lived in Minneapolis, I still saw snow in April. And I was like, the snow banks,
Oh, yeah.
it's like it wasn't until end of June they melted away.
Yeah, we hold on, man. We hold on to it. It's ridiculous. Oh,
That's like amazing. Yeah.
yeah, yeah. Well, the last couple of years haven't been that way, so we'll see. See what happens this year. Maybe you'll get the snow down in Dallas, and we can laugh at you.
Right? I think you should come up for a visit, Jim.
There you go.
Yeah. Yeah.
You
I
haven't
read it
been
come
here.
up.
Yeah, right. Don't want to. Awesome.
Yeah.
Well, hey, I think we should probably get going. Just kind of set the stage for the call, kind of what we wanted to accomplish. I wanted to introduce Jim Mahalik. He is a head of our condo team at Supreme Lending. Wealth of knowledge nationally. Obviously, heard he's lived here in Minnesota, so he knows what we're dealing with a little bit. He actually knows the geography here of what we have. But just been a wealth of knowledge with the condos. You saved us on a lot of deals, set us up with some really good deals, made things happen that other people couldn't. So I think it's a great resource. So the idea here is Jim's got a great presentation that can share that hopefully will spur some ideas, some questions for everybody. Inform you if you're new-ish to condos. So he'll be able to kind of spur some information that way. So take notes of that. He'll give the presentation, and then afterwards we'll be able to do a question and answer, kind of answer any questions for you. And then if there's a topic that we only glance over or just kind of go surface level, we can take it offline and go deeper too. So just make note of that too. Be happy to kind of go deeper with that to see how it fits into your business. And we can do. So thanks for joining us. Jim, with that, I'll turn it over to you, sir.
Okay, great. Well, good morning, everyone. Not quite the afternoon. Right. First of all, let's get started on how many people have done a condo. So how many people have done a condo within the last, call it 6 months? If you've done a condo, just say yes on the chat. Just see how many of you have done. All right, great, Carla. Anyone else? All right. All right. Give it 2 currently. Yep, Eric. So for my agents out there, okay, that's about right. So I've been having this class convolution for the past almost 9 years. Okay, this class is actually CE credited in 7 different states, mainly the southern states, New Hampshire. And each time, whether it's a group of 30 or a group of 120, it's been my largest group, about 120, 150. It's about 10% of selling buyers, agent, realtors itself that say, hey, I've done the condo. Yes, 10%, and that's it. And so condos make up anywhere between 10 and 15% of the market, especially now with the supply shortages. People are looking more to condos. Now with interest rates being higher, inflation costs, people are looking at condos as a good alternative. With the millennials buying more than 35% of the condos in the market because they obviously don't want to mow a yard, they want to have that social centric. Condos are becoming a lot more viable properties for families, starter homes, and then of course, people like Lemnar, Pulte are building 55 plus condo communities. In fact, I got one going up close to us. That's 162 units. Yes. And so that's a lot of opportunities in condos. So what we're going to do here is go through our course. It's called Convolution. And I'm going to share my screen. All right. Can everybody see that? You can. So I'm going to say yes. Alex, can you see my screen? You can. Eric, is everybody able to unmute themselves?
I think so. I think you have the control, but I don't think it's turned off. So I think yes, but I think we can see you.
I can see your screen.
Okay, great. All right, so this course, again, it's to get you familiar with condos. As a selling agent or a buyer's agent, you're going to take something out of this. And it's really going to help you not only prepare a very positive and smooth transition, but really it's going to make you feel better about bringing condos into your repertoire. You know, a lot of people stay away from condos because they're not really familiar, or maybe they got burnt once or twice. You know, the lender didn't approve a condo until 5 days after close of escrow. Going through this course is going to help you prepare your listing or working with a buyer going into a condo and help avoid that missing that close of escrow. Now, while we go through this, you can unmute yourself or I'll check the chat box. but go ahead and ask questions, okay? So I'm going to go through this not too quickly, but kind of quickly. So if we do get a question, I can fit it all in, okay? So again, my name is Jim Mahalik. I'm the director of the Project Review Office. Supreme Lending does have a full condo team, so it's just not myself. If I go on vacation, you don't have to wait for your condo to get approved. We have a total of 4 or 5 condo underwriters. We do have condo processors that help the loan officers get their condo documents, which is very important. So it's a true condo team. There's only about 62 condo teams across the nation. We're one of the biggest condo teams, and we're one of the ones that do about 5,000 to 6,000 condos and projects across the nation a year. So the experience is there. So what we're going to do within the next 15, 20 minutes, we're going to go over the benefits of condos, because there are, and how hopefully this will help you present these benefits to your client. Then what defines a condo compared to a PUD? And we're going to look at townhomes, because a townhome is not always, a PUD, which is land ownership. Townhome can also be a condo. So some realtors fall into that pitfall where, oh, okay, yeah, and then they get a buyer, and the buyer goes to the lender, and everybody's happy until 2 days before closing, when they find out it's a condo. So we're going to help you avoid that. We're going to tell you what's the best way or resource to use to determine if you do have a condo. And then I don't know how many people have heard the term non-warrantable. You can just chat in the box if you have yes or no. How many who has heard of the term non-warrantable or warrantable? Okay, Heather. It's very important, and you'll learn why. There's a lot of things that go with a non-warrantable condo, including extended timeline. And so you want to know that at the very beginning when you're bringing on a listing, or if you're showing your client, a buyer, a condo, to make sure that you ask that. So we'll go through that. We're going to talk about very briefly the documentation that's needed on the condo, so you're aware of it. And then turn times. How long is it going to take for that buyer's lender to approve this condo? What is typical? Is it 2 weeks? Is it 3 weeks? Is it 5 days? So, and this should be the norm. So everything that I'm presenting to you, yes, Supreme Lending is very good at it, but it also applies to any and all lenders, so to speak. All right. So please take notes, and don't be afraid to ask questions. Okay. So we're going to jump into it. Benefits of a condo. So just in Minnesota alone, these are stats from Minnesota. The condo, it's 44% cheaper to buy a condo than it is a single family home. You see the stats right there. $376,000 for a single family home compared to $210,000 for a condo. All right, so that means that as a listing agent, you can get more qualified buyers into that condominium than you would a listing into a single family home. So right off the bat, that's the first benefit. Second benefit is if you're working with, a young professional or a couple who are not ready to take on the full responsibility, maybe they're busy. We have a lot of professionals like doctors and attorneys that go into condos because they just don't have that lifestyle, that time in their lifestyle to dedicate to maintenance of a house. So that's where the HOA comes in and does all that for you. Living in a home, when you take off for vacation, you have to worry about, okay, the mail, you're going to have to worry about your roof if the storm goes through. Just living in a house, you have problems like plumbing, your windows and things of that nature. Whereas in a condominium, all that's taken care of. And so a lot of people say, well, a condominium has that extra HOA fee that's a little bit higher. And that's true, but you don't have all those other fees if you were to own a home. Like you have to paint your home, and you have to re-roof your home after so many years. So just so many benefits. And then I can't even tell you the benefits that if you're a single dad or a single mom, how it really helps to live in a condo where you don't have to worry about all those things. So, yep. And then the amenities. Condominium amenities will vary. Again, it all depends on the lifestyle of your client. You know, is your client into, that gym membership? So this condo will, defray that cost. It does the condo allow big dogs, things of that nature? Does it have a dog park? So amenities do come as a very positive benefit to a condominium ownership. You don't have to care for a yard, but yet they have a dog park nearby. So, but those are very strong benefits to review with your buyer. And then if you're a seller, make sure you highlight some of these benefits, on the talk through sheet at an open house. So things to consider. So I touched on it as far as the characteristics of a condo. Um, condos come in different shapes and designs. So you have a townhome condo, you know what that looks like, mid-rise and a high-rise. And each design you have to think about, my client, are they elderly? A condo will take care of your yard and everything, but they're looking to go into 55 plus community. So are we talking about a mid-rise? Are we talking about high-rise? Are we talking about townhome? Things of that nature. Also, it's the legal documents. So just like a gated community of single-family homes, a condo has those restrictions also. So a condo may have restrictions on dog size. I've seen condos that have restrictions on, noise or, what time kids could be out late at night. Some condos say, there's a 10 p.m. curfew, which, if that's something that fits within your lifestyle, that you don't want a whole bunch of noise at 10 o'clock at night, that might be a good condo project to go into. So it's important to get those legal documents. And if you're a listing agent, have them available, right? If you're a buyer's agent and you've interviewed your client, now you know which type of condo community you're looking for. And then the insurance, you got to remember your insurance is covered by your HOA fee, all right? And the liability is also covered by your HOA. So if somebody does come into your house, let's say you live in a regular home, not in a condo. Somebody comes into your house and they slips and falls. Yeah, they're your friend and they're not going to see you, but you just don't know, right? Whereas the HOA is going to have the insurance. Something happens, to someone in the condo community, that master policy is going to cover that. So there's a lot more umbrella coverages, so to speak, in the condo community. Okay. Does anybody have any questions right now about the benefits of condos, things of that nature? All right. Like I said, I'm going to kind of go through this kind of quickly here. Now, resources to check if a condo is warrantable, and we'll get into those meaning, what that meaning is in a minute. But whenever you do have a condo listing or you're thinking about, hey, a condo is a good fit for my buyer, whether it's because of the loan amount or, the type of lifestyle, there's 3 places you should check. One for conventional financing, 2, FHA, if that's going to be available, and 3, if you're working with a veteran, can my veteran utilize their benefit in this condo? So these are the 3 sites you want to go to. the first site Fannie Mae used to have an open site per state. They no longer have it open. You have to go to a lender that's a direct seller servicer to Fannie Mae. Now, Freddie Mac has their own list, but it's not readily available. You have to go into a certain program. Whereas Fannie Mae does print out a whole list and it's available to your lender. And so like us, you can shoot an email to Eric or Nikki or Ben, any of the loan officers. And I encourage them, just shoot me the name of the condo and the address. And I'll come back and let you know if that's any red flags with Fannie Mae or it's approved with Fannie Mae. I'll let you know the same for FHA and VA. Okay. So let us do some of the heavy lifting here at the very beginning. Avoid some red flags for you, because if you send us a name and address, we come back to you and say, this project's ineligible for Fannie and FHA. It's more than likely that's probably not a good fit for your client. There's something wrong with that condo. Now, if you're a listing agent, I highly suggest that you send that address and the condo name to us as soon as possible. And that way we can tell you yes or no. And if it's you have some things wrong with your condo, we can tell you that up front and make you aware of that. And that way, when you do get a buyer for that listing of a condo, you can make them aware, look, our condo has some issues with it. It cannot go Fannie or Freddie. It's going to have to go non-warrantable. So right away, you're letting that buyer know this is how you're going to get your loan program, because there are loan programs for non-warrantable condos. Okay. Now let's go into some more of the technical terms here. What defines a condo? Okay. Basically, you'll have your 4 bullet points there. And the big telltale sign, if I'm sitting down with a client ready to write up a listing, and it's a townhome, let's say it's a townhome, I'm not sure. One of the ways to make sure is, do you own the land underneath? All right. That's a big thing. If you own the land underneath, then it's not a condo. It's what we call planned unit development. If you say, no, I don't own the land underneath, or the land underneath is owned by all the condo owners, then yeah, it's a condo, right? So a condo has no land ownership. Another thing is, if you have one home, one unit on top of another, okay, if they're stacked like this picture, it automatically is a condo. There's no guesswork. If you have like a 2-story building and you have a front door here and a front door of a different unit here, top of each other, there's no way that unit owner has land ownership. So that is a condo, okay? Now, the other thing is that the common area for that development, if it's a condo, it's going to be owned by all the unit owners. Yes, there's an HOA. They administer, the restrictions, but the land for the common area is also owned by the unit owners. This is different from a planned unit development. A PUD is where the unit owner owns their land and the HOA owns the common area, not the unit owners. So it's pretty much all about land ownership by telling the difference between a condo and a PUD. I'm going to pause here. Does anybody have any questions? That's really huge. Yes, we can share that the deck with the links after the training. Sure can. There's 3 different types of condos. There's the attached, detached, where the unit sits by itself. It looks like a single family home. And then a conventional site condo. So the difference between the detached condo and a conventional site condo is A detached condo, the unit owner is just still responsible for the inside. That's it. Whereas a site condo, it looks like the same as a detached, but on a site condo, the unit owner is responsible for the roof, the foundation, the trees, the sprinkler system, and everything. So if you ever heard of that term, site condos, that's the difference. A detached condo, me as a unit, I'm not responsible about anything outside, just the inside. A site condo, everything, I'm responsible for everything. All right. This will be stated within the legal documents. It's not just stated on the county website or on a title report. It will say in the legal documents what the unit owner is responsible for on a detached condo. Okay. Now, go ahead and use the chat box. You see this picture here. How many people think that is a PUD, Plan Unit Development? If you think it's a PUD, go ahead and type in PUD on the chat. And if you think it's a condo, type in condo. Okay, Jesse says condo. Anybody else want to take a crack at it? Benson's thinking condo. It feels like a trap. Yeah. It and it kind of does, you know, if you don't know the difference and you've had a very little exposure, you're going to think this is, you know, a regular PUD, a project unit development, where, you know, you own the land in the front and the back. Well, the truth about this one, this is a PUD. It's a planned unit development. Although there's many, many projects that look like this that are condos. Okay. So in this case, this is a PUD, and this is an actual listing out there in Minnetonka. A really nice one too. So again, a townhome only describes the structural design. It's side by side. There's no unit on top. Okay. Now you can see over here, this is 3 stories. This is more likely a condo back here. And you can pretty much tell it's almost the same developer. Okay, same window designs and stuff like that. So it's not unlikely to have PUDs where you own the land mixed in with a condo where it's one on top of another. So that's why it's very important to recognize what do you have up front. All right. So we're going to go ahead and go through that. Again, this is just reiterating. A PUD is when you own that land, front and back. And actually, the previous slide, I was saying that's a PUD. This slide, this project is also actually a condo. Yeah. Now, we do co-ops and condo tails. I can't even think of a co-op up there in Minnesota at all. A condo tail, yeah. If you go west of Minnetonka, you go around the lakes, just north of the lake, you got $1 million condos up there. Some of them are in condo tails where the property manager rents out your unit and acts like a hotel. And we do loans in condo tails, in true condo tails. And some HOAs have a hotel license. And so they're able to administrate it. You know, you buy your condo, you can rent out the unit for $1,000 a week. Yep. So, but just get you familiar that they're out there. Typically, they're around the lakes. And if you do come across one, and I guess the big question, hey, how do I, now what's a question I can ask if this is a condo tell? ask if the HOA or the property management for the HOA delegates rentals or manage the rentals for the unit owners. If they say yes, then it's a condo tail. Again, if the management company of the HOA or the HOA themselves manage rentals for the unit owners, that's a condo tail. Oh, there's a co-op in Edina. Really? I worked out of Edina, right across the Mall of America. Didn't know that. Yeah, we do have an outlet for co-ops outside of the 5 boroughs in New York. So if you do get one, give us a call. Now let's go and determine how do Jim? Okay, you show me a townhome. Now I'm getting kind of scared. Is it PUD or condo? How do I make sure one or the other? All right, so legal documentation. That's the only way. Do not trust county websites. We have corrected many county websites, meaning that the legal documentation, the declarations, sometimes they're called CCNRs, they dictate what's on the county website. It's not the other way around. Okay, so I've been to county websites and district attorneys and say, hey, you need to change this, and say, provide me documentation. I provide them the CCNRs and they said, okay, we'll get it changed. Yep. The full legal description for title. So if you have your title friends helping you, again, once you get that listing for a condo and it's in a townhome, especially if it's in a townhome, you want to go to your title friends or ask the unit owner for the HOA and get their declaration. And within there, it's going to say if it's a condominium or not. Within the declaration, some are 30 pages, some are 100. Don't worry about it. Again, send that legal description to Erica, Nikki, or Ben, or one of their loan officers, and utilize them. They trust me, Nikki likes to be abused. So I have her on mute.
Nikki's happy to help all the time. It's okay.
There you go. So, but that's where you're truly going to determine if it's a condo or not. All right. Also, you want to get the full legal description or the CCNRs again as a listing agent, just to make sure you have them available in case your buyer's agent or your buyer asks for them. Okay. Also, it tells us the name of the condominium. So when we go search for, is this condo warrantable or not, like at the very beginning of a presentation, it's going to give you the name of that condominium. Okay. Any questions on where to get these documents? Because this is very important. Oh. All right, like I tell my kids, silence is the same as consent. So we'll go on. All right, listing agents. So if you're a listing agent on a condo, these are some things to think about. All right. And we have them listed here because some of these can really get you into prolonging that listing. Litigation, probably about 90% of the litigation we can find a home for. But there's that 10%, like maybe there was a wrongful death. Somebody was crossing between the two condo buildings and the HOA didn't have a mirror so drivers can see, and that person got hit. That actually has happened, unfortunately. And it tied up that condo where it was only cash purchasers for about 2 years. So that, and whenever you have a condo and it's cash only, so you go from a buyer pool about 85 to 90% of availability of buyers to about 15 to 20%. That's it. So you really reduce the number of people that can actually buy a condo unit. So that's why you need to know some of these questions here. Okay. And then buyer's agents. So if you have a client thinking that a condo is going to fit their lifestyle, their price range. These are some things that you need to ask, especially, special assessments. The cost of insurance have gone up. A lot of ways that, they're making up for the insurance increases. These HOAs are doing special assessments. So it's important to know if there's one ongoing. You don't want to get your client into a condo and all of a sudden get hit a month later and they have to pay $500 extra on top of the HOA fee. So if nothing else, these are things, or these are slides that you should keep as a good resource to have. But on the flip side, asking these questions should feel and should give you more confidence to go into the condo market, not only list, but present your client to a condo, right? Now, this flyer here has everything I just presented in the last couple of slides. This is a one-page letter flyer that you can keep, and I'm sure Eric or Nikki or Ben will send this out to you. But this is a checklist. As a listing agent, you want to have those documentations available, okay? And then there have some condo-specific areas that you want to check off. If you're a buyer's agent, you have that client in hand, you think a condo may do great, look at this. A question comes in, has there been an industry-wide increase in condo insurance premiums? I have had 2 clients reach out who purchased in the last few years and they're getting hit with 4,000 to 10,000 assessments to afford insurance. Yes. Yep, that is true. Well, even my home here in Texas, I have a single family residence. My insurance, this is what happened to me this year, went from 3,700 to 6,700. Yes. From almost 4,000 to almost 7,000 in 1 year. So it's not only condominiums, but it is single family homes. Condominiums are hit a little bit harder just because Champaign Tower South, insurance companies are realizing there's an unknown risk. And so that unknown risk is being priced into it. We see that insurance premiums will be settling down within the next year or so. But you're in Minnesota. You don't have to worry about the hurricanes that are about to hit people like Florida or Texas coast. So there'll be a jump because of the overall risk in the industry has increased. But we don't see that being repetitive from 1 year to another in your area. Now, if you're in Florida, yes. In fact, there's a lot of areas you probably heard that Florida cannot get any type of insurance, whether it be a house, a mobile home, or a condo building. Same way with California. You got friends in California that it's really tough getting insurance if you live by a fire zone. So, yep, that's unfortunately 4,000 a year. That's almost on the low side, So, and if you think about it, 4,000 a year, that's about 400 a month. Yeah, that increase is about right. Yeah. But use this flyer here. This was not developed by loan officers, by the way. This was developed about 18 months ago. It was developed by realtors, and we sent this out to real estate agent partners in Southern Alabama, Destin, Dallas, Texas, Phoenix, Arizona. And so we got a couple of different demographics and different characteristics of condos, obviously condo tails in the coast. And that's how this flyer was made. So it was actually a really good input. I hope y'all appreciate it and keep it by your side. There's 2 categories of condos I want to go into, and this is important to know. Because with an established condo, meaning that it's built out, all the units are sold, nothing else needs to be built out, like common areas, or, I might have a condo project which 3 of the 4 buildings were built, but the 5th one, the developer didn't do it because ran out of money. That is not an established project. An established project is all the attendant buildings were built out and it's complete. A new project, it's just what it says. It's a new construction project, or it's a project that was meant to have 5 buildings, it only has 4. Now, why is that important? Again, you want to see right away if there's going to be any, hurdles to jump over when you're listing or buying into a condo. If it's established condo, great, check that box right away. But if it looks like it's a newer project and you look around and something seems undone, like the landscaping, or maybe you have some empty lots to that building, you want to see if that's a new project, meaning that is there any more building that needs to happen? And then from that point, do reach out to us because there's more questions to really tune in. If it's a new condo or established. Also, your loan programs may be limited depending on the type of condo. Okay, so just keep that in back. Now we're going to jump into warrantable and non-warrantable. At the very beginning, I asked if that term was familiar. When it comes to condo, this is very important. So warrantable condo, what that means, it meets guidelines. It meets underwriting guidelines. Same thing like a bar. A bar, you want them pre-qualified. They meet guidelines. Yes. Okay. Got pre-qualified. You got that pre-qual letter, that approval letter from the lender. There's the same thing with condos. Condos, they meet guidelines. They're warrantable. They don't meet guidelines. They're non-warrantable. And I'm going to get into some of those characteristics of a condo, like commercial space, that makes a condo non-warrantable. Okay. But let's go ahead and how does non-warrantable condos affect you? So if you're warrantable, you're going to get the best financing. Okay. Fannie Mae, best rates, more, you can buy more home, right? Because your interest rates is the best interest rates in the market. The higher the interest rate, the lower, the less house you can buy. Your turn times are 2 to 3 days on warrantable. Compare that to non-warrantable. You're looking at 10 to 15 days minimum on a non-warrantable condo. So if your contract date is 30 business days, half of that time is going to be spent on getting that condo approved if it's non-warrantable. Yep. That's why it's very important to know what kind of condo you have. Is it a warrantable condo or non-warrantable? Warrantable condo, less documents. 3 documents and that is it. 3. Non-warrantable, I can't even pick up enough fingers. Sometimes it's 8, 10. Other times I'm asking for a whole list of 20 documents. The resale, you can days on market typically for a condo in your area. It's about 30 days. The days on market for a non-warrantable condo, it could range anywhere from 45 to 75 days in your area. Double on what a warrantable condo is. And then a warrantable condo, it's a more positive experience. Whereas typically in a non-warrantable condo, especially if you don't know it's non-warrantable and you get that email from the loan officer or from the buyer's agent saying, oh, you have a non-warrantable condo. Yeah, that's not a good experience because you're blindsided, your listing, your seller is blindsided, and so it doesn't give you a good light. That's why it's very important to know, especially if you got a warrantable or non-warrantable condo. Now, some of the things that make a condo non-warrantable, all right, meaning that doesn't meet these guidelines, and this is typical for your area. There's a lot more things that make a condo non-warrantable, but these are the major things. Those other things that are not listed, they probably affect your area maybe 0.9% out of 100 of the times. Okay, so very little. All right. But in your area, a lot of times we see investor concentration, meaning number of rentals, and we're going to go through that. Single entity, meaning one person. So if you have 100 condos and one person owned more than 20 of the units, that makes it non-warrantable. Commercial space. Let's say you have commercial space on the first 2 floors, and you know the condo only has 3 floors. Well, that's more than 35% commercial space. And then we're going to go through insurance. We talked about that. We're going to go through critical repairs. You might have heard that about condos recently, especially with that condo tower collapsing in Florida. And then we're going to go through litigation. Okay. Now, all these may seem that, okay, they're going to be difficult to go through. Not really. Not really. To give you an example, litigation gets approved 90% of the time. It's just a matter of getting the documentation. So you know that timeline that we talked about, warrantable compared to non-warrantable? Yeah, that timeline might fall in between there. So we might, with litigation, we got to get a copy of the complaint, and we have to get, from the attorney. So you may not close as quick as a warrantable, but you're not going to close as slow as a non-warrantable. It's that somewhere in between. So let's go ahead and dive into these real quick. So for occupancy requirements, when we talk about a person that is going to occupy a condo as an owner occupied, okay, that condo can have over 75% rentals. It doesn't need to be 50% for conventional. So in other words, if I have a condo project that has 100 units and 75% of those units are rentals, that project is still eligible for condo financing. It's still warrantable. Yes. Now, if that's FHA, it's non-warrantable because FHA, you have to have 50% owner occupied. All right. So, but for occupancy for conventional, again, you can have 100% of your units be rentals, but if your buyer coming in is a primary homeowner, then the number of rentals do not matter. Yep.
Wow.
Yeah. Does everyone understand that? Miss Carla?
Hey, Jim, is that new? Did it used to have like a certain percent of occupancy, right?
Um,
Or is that
that
with a
was
limited review, or how does that? I always thought you had to have a certain percent to be owner occupied.
no, not for conventional. It's one of the misunderstood guidelines. In fact, I've heard so many sales partners, realtors saying like, oh, this project is non-warrantable because it has a lot of rentals. Well, that's not true. If the person buying that condo unit is for their own home, it's a primary, then that guideline does not apply. Yep. So
I bet that happens a
everybody,
lot where people think they're not financeable based on that.
yeah. So in the chat, let me know if that's something new you've learned today. Say yes or no if that's something new you learned today. Okay. Good. because you'll even have HOAs tell selling agents we're non-warrantable because we have too many rentals, and right away they're typing up their MLS, their listing, and they'll type in non-warrantable just based off of what the HOA has told them, and it's like you can't trust that. That's why you want to always partner up with a lender when it comes to a condo. Yep. So let's go ahead to the next one. And that just reiterates for FHA loans must have 50%. Okay. Now, even for investment properties, so I have a client who wants to buy a condo. They want to increase their wealth. This is the best way of doing it. And they want to buy an investment home. A condo may be the great way of doing it because it's lower maintenance compared to buying an investment single family residence. You have the HOA taking care of everything. So if they go into a condo and that condo says, well, the HOA tells you they have 60% of rentals, that's fine. As an investment home, you can still get in. You just have to put 25% down. Yes. As long as you put 25% down, as an investor, I can still buy a condo and a project that has more than 50% rentals. Yep. And that's a guideline. So very important. And by the way, we get at least 1 to 2 loans from other lenders on that guideline. So for those people that just heard of this at first, there's even other lenders, credit unions that turn away the borrowers because of the condo, because the main rentals, and they come over to us and we said, yep, bring the loan in because we can do it. Next, non-warrantable is single entity. This is when one person owns 20%, or when it comes to a condo less than 20 units, you're limited to 2 units. If you're beyond that guideline, it makes the project non-warrantable. Yes. And so you're over in this side where it takes longer, higher rates, and so forth. Now, we can still do it. We can still have that loan program. But remember, as buyers and listing agents, that's going to take a little bit longer to get through. So that's why when you interview, you want to make sure you ask this question. Do you know if someone in this condo building owns more than 20%? It's very important. And if you identify that non-warrantable characteristic up front, then you can post it, or you can work with that buyer's agent and then say, hey, we're non-warrantable because of this. And right away, if I knew what that non-warrantable characteristic was, I wouldn't be talking to my loan officer about Fannie or Freddie or regular programs. I say, okay, great. Let's quickly go over to a non-warrantable program. If it's close to 20%, let's say it's 21, 24%, I know through my experience I can get an exception to Fannie and Freddie. Again, you have to be a direct seller to get those exceptions. But if the quickest we know it, the quicker return on that lending program we can get to the buyer. Yep. Any questions on single entity? No? Okay. Commercial space. As you see in this example, let's start with the bottom left. This first floor you can see is commercial, but this is a pretty tall building. It's actually a 5-story building. So I can tell you right now, that commercial space on the first floor is not greater than 35% of the overall building. Compare that to the right side. I might have an issue here because this is a restaurant, this is commercial, and I don't know how much of this is commercial. Now, this is condo going up, but this is borderline. I might need to get together with, my lender if you're a listing agent, if you're a buyer's agent, and your buyer loves this because it's very social centric. I love these type of condos myself. I rented quite a few on Airbnb, and yeah, you just come back down, wake up, get your coffee, walk around, shop. Beautiful. But you need to get together with the lender and see, hey, how can I make sure this condo is warrantable? I don't have that much commercial space. Yep. So 35% is the key percentage. The other thing that knocks off condos in your area is delinquencies. So delinquencies cannot be more than 15%. That is the guideline. If it's beyond 15%, it becomes non-warrantable. Now, we do have workarounds. A borrower can put more money down, or we can actually work with the HOA and see, okay, you have 25 units that are 60 days over, right? Let's say your contract extends to the middle of next month. I might be able to work with the HOA and say, okay, update me your numbers at the 2nd of January or at the 2nd of October. Have the delinquencies changed? Things of that nature. But yeah, now this is something that you're not going to know right off the bat. This is something that we're going to get from the condo questionnaire. All right. But this has more flexibilities. Lenders have more flexibilities and more programs to deal with this non-warrantable characteristic than the ones previous and the ones that I am going to show you going forward. Okay. But I want to throw it out there because it is an issue that you might come across. Right? Now, the other thing is insurance. We talked about insurance. Maximum deductible is 5%. That is something that makes it non-warrantable. But again, we do have programs to help you get a loan for a non-warrantable that has insurance issues. The other thing is critical repairs. I put this on here and you can review, but during your interview, you want to ask if there's been any notice from the HOAs of any critical repairs. All right. And that's like, is there water coming into the units from the roofs? Have you heard of that within the condominium? So if you're that selling agent, that's part of your interview. If you're a buyer's agent, that is something that you want to ask the selling agent. Okay. And then we already talked about litigation. All right. Just like there's two type of condos, established and new, there are two type of project reviews. In other words, underwriting. There's a full project review, meaning that we're going to get the maximum financing for that borrower. And then there's a limited review. So in your area, if it's a primary home and they're putting more than 10% down, that's a limited review, meaning less documentation. Okay. And then one of the last things I want to get to is turn times. You want to take a screenshot or a picture of this. This should be your typical turn times of any lender. All right. To get the condominium approved. And then this is an important slide. Process steps to ensure you and your client have a positive experience and a successful experience. You want to determine the type of property, PUD or condo, and you do that by interviewing the selling agent or the seller, resource the legal docs, obtain the documentation, and assist the condo approval with the client and the lender as soon as possible if you're listing that condo. And then when listing a condo or reviewing the condo possibilities, you always want to collaborate for a lender. Okay. And my last question to everybody is, What, in case you have any questions, who is the resource you can reach out to? And you can throw it in the chat box. And that's Eric, Nikki, or Ben. Yep, or Jack. All right. Again, I know this was kind of quickly. I'll work with Eric to get this deck out to you. Okay. And other than that, please, with any questions that you have following this session, just reach out to us. Okay. Address, condo project name. In fact, we can give you a list of condos that are approved within a certain zip code. All right. Other than that, Eric, I give it back to you.
Awesome. Thank you so much, Jim. Yeah, just reiterate, guys, reach out if you have any questions on that. Like you said, you know, ton of good information on here. We'll make sure we get the slide deck to you. I'll work with Candy and Lydia to make sure we got all the email addresses for everybody. Anybody else, you can shoot me a note too. I'll make sure you get it on there. But appreciate you showing up. Thank you very much. Thank you very much, Jim. And hopefully we can do another thing like this in the future, so we can go even deeper.
Quick question, Eric. This is
Yes,
Carla.
Carla. Yes.
On the situation where the deductible is higher than the 5%, is the association disclosing that in any of the documents, or where do we find that?
That's going to be found on the master insurance certificate. So one of the things on that checklist that you saw earlier is to obtain a copy of the master insurance certificate. And it will say it on there. Or if you just want to obtain the certificate and shoot it over to us, it takes literally 2 minutes to read through a certificate. Seriously.
Got it. Thank you.
Mm-hmm.
Hey, Jim, I have a question. So, you know, at all these places that are like fell off of their FHA approvals or whatnot, is there a way for us to find the list of developments who aren't approved that we can go out and kind of get spot approvals or approvals on? I mean, I want to find who's approved, but how do you find who is no longer approved?
Well, you know, FHA has a really good site that you can go on, or that we can go on, and here we go.
Yeah.
That we can search. It's either FHA Connection, or it's actually on the public website. You can go, and I'll show you the same thing. When you go on the public website, and it's that link that I provided in the slides.
Okay.
Yeah, and let me give you an example real quick. This is the public website here.
Yeah.
And then you'll go into, let's just go ahead into Minnesota and just let's bring up the host state. All right. So Hennepin County. So it's going to tell you if you had an approval before.
Oh, okay.
Yep. And if you had an approval before, but it's expired, there's a high likelihood, about a 90%, that our team can go in here and get an FHA spot approval. Yes. Yep. And if you ever see something that says, let me see here. A lot of this says rejected for missing documents. But you'll see some, like this one right here, it says rejected single unit. What that means, that there is an FHA spot approval. That's what that means. Not that like here, it's missing documents, it's never approved. This here is like a lender like us went in there and did a single unit approval. And so that's what a lot of us are doing, is we either getting these projects reapproved, or we're doing a single unit approval, which is a spot approval. A single unit approval is the same thing as a spot approval, where we can go in, we don't have to approve the whole project. And for our sales partners here, this happens within 5 to 15 business days. So, you know, the days, oh my gosh, it's an FHA loan, it's going to take 2 or 3 months, those days are gone. I mean, we've done a FHA spot approval in 5 days. Yep. We have the HOA working with us, and we're in and out in 5 days, folks. So,
Wow.
Yeah.
That's super fast.
All right. Any other questions?
Hey Jim, question on the insurance or like master insurance policies on it. If they're not skimping on the premiums, it seems like they're skimping on replacement coverage. And I've ran into a few problems where the replacement coverage on the insurance policy just isn't working up to if there was an elevator that broke or something that happened in the association. Is there somewhere we could just kind of take a look at quick to see if or just talk to, or what kind of questions we should ask around that, or if there's any way to combat that up front so we don't have to do a full questionnaire and do the whole process and then it comes back later on and we can't do something, right?
Right. I would recommend getting that master certificate. The seller of the unit, so the current seller, they can get that certificate for you. Either that or, the agent can supply you the HOA contact information and you can ask the HOA themselves. I wouldn't say 75%, our experience. It's been 75% of the time, and the HOA has a generic copy, meaning that it's not going to have the specific unit number or any type of lender name on it. It's just one that shows you what the coverages are, and send that to us and we can make heads or tails for you.
Another one I've been burned on is reserves too. Is that master certificate show reserves, or is that just in the condo docs?
That's in the condo docs. That's a budget.
Yeah.
No, I want to say majority of the HOAs, you can get the condo budget, the master certificate without paying. It's when you get a questionnaire that they're going to charge you.
Right, right. Are you seeing that happening a lot, or is that just me that's getting burned by those two things?
It used to, let me put it this way. 18 months ago, probably July of last year, a little bit before that, I used to decline one condo a year because of insurance. That's it. One condo a year. I'm declining probably, I shouldn't say decline, because we do put them on portfolio products or other products, but we're doing where it just happens once a year. Now it happens once a week almost.
Yeah.
Yep.
Yeah.
Yeah.
And the one that I'm talking about, you guys were able to figure it out. We were able to make an offer with that client, so it worked out. But it was just kind of it just kind of caught us off guard. But thanks, Jim. Really appreciate it. Great.
I remember when we had one time with Jim, and I don't remember if you probably don't remember this one, Jim, but it was something to do with the budget was messed up, and there's something like the ratios weren't working. But we were able to dive in and look at each deposit, or something like money was going for a pool or something. It was so random. You're like, oh, that shouldn't be a part of this. And so we made the budgets work by like $2, and they're like, and we're good. I'm like, okay. So I don't know.
Yeah.
Just win and now get as much information to Jim as possible, and I feel like he'll find a way.
You're right. Correct. There is no regulation of how an HOA should dictate their budget, how they should write down each category. And then you have to realize about only 60% of HOAs are professionally managed. So the other 40% is a volunteer on the board, and they're going to do the budget the way they think the budget should be written. And some things that should have been in reserve category are in other categories. So before we just take a look at something and say, oh, this doesn't fit, we're going to really work with that HOA. And again, the importance of working with a lender that has a full condo team. Yep. Anything else? No? Okay. Well, I'll give it back to you, Eric and Ben, and I do appreciate it.
Yep, thanks, Jim. Appreciate it. I know Eric had to hop on another call here as well, but yeah, it's we're gonna work on getting this approved for CE. By the way, Jim, I'm peppering people on the backside here too. So thank you to everybody. Yeah, and Jim, thanks so much for your time.
Thank you, folks. Take care.
Thank you, Jim. Have a good day.
Summer.
You too.
Bye.
Bye.